Back to that market, please. I see the Dow now up 200 points. I see the Nasdaq up about 250 points. The green is still on your screen. Jeff Sica's with me this Monday morning. Jeff, look, we've got a hot labor market. In 172,000 jobs added in May, 500,000 jobs added in the last 3 months. You're a real estate guy. Does that strong labor market help real estate at all?
Well, Stuart, in this case, no, it doesn't help at all. And the reason why is because higher interest rates are kryptonite to the real estate market. And I think people, before we jump to conclusions about this jobs report, I think people have to realize that of the jobs created, 70,000 were in travel and leisure. And of those 70,000, we have to consider how many directly related to the World Cup, which the projection on the World Cup nationwide over time is 185,000 jobs to support the World Cup. So I think the report was good, but what we have to be very leery of is how it is good. Too good? Is it going to put the Fed back on their heels when it comes to lowering rates? And is it going to, because if you look at the futures markets, there's an expectation later on in 2026 that we get an interest rate increase, which we do not need.
Well, we've got inflation numbers out. The consumer price index, we've got the PPI index out this week in middle of the week. If we don't get a favorable reading on inflation, is the Federal Reserve going to be forced to raise rates, and soon?
Stuart, I'm telling you, if the Federal Reserve raises rates, it is going to be horrendous for the markets. I think that you have too much debt that needs to be refinanced. This wall of maturities, the interest rates are too high. I think the Fed should, if anything, lower rates. If they can't bring themselves to lower rates, they better just do nothing, because we do not need higher rates right now. And the CPI, let's face it, it's going to be robust. It's because energy prices are pushing up consumer prices, which control 70% of the economy. It is going to be a strong number, but I don't think it justifies an interest rate increase.
An interest rate increase will be a bad news day for the market. I think you're right. Jeff Sica, thanks very much.
Thank you,
See you soon.